What's up, Discord? Welcome back to another market analysis. Welcome back, guys. It is a new month, right? We did just start November. We had NFP last week. We're going to talk about all of that in the charts. Now, one thing I want you guys to understand is as we start getting closer to these holidays, volatility is going to slow down. You're going to have people traveling to go see family members. We're going to have a lot of people spending a lot more money. So it's not going to be a lot more money circulating into the markets around this time. It's usually a lot more money circulating out of the markets. So this is why we see low volatility and everything like that, with people spending money with family, all these different holidays. We got New Year's, all of these different holidays coming up. Right, so understand that we're going to see volatility start slowing down next month, probably like the last half of next month, probably like the last 2 weeks of December going into January till we get started back up on that new month during January, right? So with that being said, we're going to get right into it. One thing I want you guys to understand is this week we do have the presidential election on Tuesday. That is something we're going to pay attention to. And we also have FOMC this week as well. Okay, so this week is going to be very big as far as fundamental analysis. Is going to be very big. Okay, so we want to pay attention to what's going on, what they're talking about, who gets elected. And stuff like that, just to see what type of effect that's going to have on the market. You know, each I would say candidate has different opinions on how the economy should be and stuff like that. So it is going to have some type of effect, especially on the US dollar. So that's something we want to pay attention to as far as markets, right? And then just strictly staying on the markets and what we expect to see on the markets. So that is something that we want to pay attention to, so we know what side of the market we should be on and how that's going to translate to what we want to see in these charts. Okay, so Tuesday and Thursday are going to be very big weeks, probably going to see some volatility, and we're going to see what happens. Okay, so just make sure you're paying attention, being cautious during those days, and make sure we're keeping an eye out for that. Now, going straight into like the technical analysis and what's going on the charts. So one thing I want to say as far as EU, now I do have all these drawings and stuff here already. I was doing some analysis earlier, and I will get into that. But just looking on the higher time frame, on the hour time frame, we're still in a huge bearish market cycle. As you can see, we're still pushing lower, right? We're still in this big push to the downside, and DXY also can confirm that as well. We haven't really invalidated anything as far as invalidating any of the price action, and we haven't really seen any major pushes to the downside yet. All we're seeing is we're getting this stalled movement, which is also just like kind of confirming to me that we are going to continue being aggressive and going higher. This looks like just a reaccumulation. Looks like the market just stopped, letting off some steam before we continue going to the upside. Now, what I would like to see is if we form a distribution within this area here, we form a better distribution, probably get a high and break the low. One thing I'm seeing is we're not maintaining our lows. We're getting wicks underneath our lows. So this is why I do believe we're going to continue going higher, because we're not maintaining and we're not seeing that the market wants to actually sit here and actually give us this retracement. So this was making me think that, DXY and the dollar is going to continue to increase towards the upside. Also, like I said before, we do have liquidity above these highs that the market could come into. So that is something that we got to pay attention as well. So DXY still looks strong, still look like we're on a strong bullish push. Have not changed my idea on that as of right now. Now, translating that into EU and GU, we're going to start with EU since I already had this already lined up. We can see we had that strong push to the downside. Now the market has halted and we have gave a small retracement, right? As soon as we broke this high right here, this was the first indication that we could possibly be going into a reversal, showing buyers interest. That's why I have that here, and I am going to delete these boxes and delete these texts. I don't like to see them on my chart, but for now I'm going to leave them on there. But so we had this push to the downside. Now we can see we have from this low, we push higher. As we made this low right here, you can see as we're pushing higher, we are taking out the lows, going higher. We're getting the mitigations down and we're going higher. Now, our latest area, our latest mitigation point is here, right? This is our latest mitigation point here. We swept Asian lows and we got that push higher. This whole thing is one push to me. Now, with this being said, I have this lined up right here because this right here could be a key zone, depending on, that's why I have it here as next target, depending on if we break this low. If we break this low right here, this is going to be the next area that we're going to look for, because that's going to be our distribution, potentially setting us right back up into that bearish market cycle, and this being just a redistribution, and we're continue seeing that push to the downside, right? That is something that I am anticipating, and that could possibly happen, but we need the confirmations first. This is why we're still going to be looking at this area. So what I'm going to be doing within this area here, I'm not taking any limit orders, right? We're not going to take a limit order within this area, but we are definitely going to watch how the market reacts within this area and see if we get any price action, as far as seeing any accumulations or seeing anything that gives us a reason to say that buyers wants to get in, at least for that day, and at least seeing, let's say we get a small accumulation that's showing us some bullish pushes, we can at least take that to the upside to target this area, giving us an easy 1 to 3, 1 to 4, 1 to 5, right? However much you guys are targeting, getting an easy 1 to 3, 1 to 4, just to get back into this area, and then seeing how the market respects this. If we continue going lower, and we're going to continue following the higher time frame bearish cycle that we've been seeing go to the downside, because like I said, I am anticipating DXY to continue going higher. We haven't seen any reason for DXY not to go higher, since we haven't invalidated any lows or anything like that. So that's why this area is going to be something that we're going to pay attention to and see how we react. Now, of course, if the market just flows through this low here and we just break this low, we're going to continue looking for redistributions lower, because we do have a lot of liquidity underneath these lows here that we can target. We're going to look for redistros lower. We're going to look for those bearish pushes. So something like this, manipulation of the highs, we see that, we take it lower. Or if we break this low, we're going to look for that. This I would take a limit order on here if we do break this low. All right, but no limit order here, guys. No limit order here, since the market's already here. Now we have to just watch to see if we're going to get any buyer's opportunity within that area, and see if the market continues lower. Now, if we just react from this area, give something, push, and then go lower, we're going to take that mitigation to continue higher. To continue lower, sorry. All right, so that's going to be a key area we're going to look for. I'm going to have this in here, and I'm going to have it ready to go. Let's see. All right, there we go. We're going to have that at the 50%. All right, that's something we're going to look for. Now, moving on to GU. So GU is at a pretty good spot as well. Going on the higher time frame, what have we been seeing? So we have been seeing a drive towards the upside, where we're seeing lows, highs, lows, highs, lows, highs, right? I'm not considering this a low, because this did not mitigate anything. We did not come low enough to where we can say this is a valid pullback, right? So if I draw my fibs to that high, we see the market did not even make it to the 50%, or even underneath the 50%, nor did the market even mitigate anything of importance. And even if I zoom in into this reaccumulation that I'm seeing here on the lower time frame, you can see that the market invalidated that reaccumulation. So the market just ended up going higher. So me personally, I consider this one huge leg until we get to this high. So now if the market was to go higher, now we would say this is a valid low, breaking this high, right? Because we've came back at least to the 50%, and we've gotten a good retracement, and we are mitigating something. So now we can say that the market is in a good area. So we could say that the market wants to go higher at this point. Now, we know what's going on with DXY. Okay, so we're still going to be cautious, right? We're still going to be cautious. We're going to play the price action first. All right, make sure you react off the price action first. This is why we have this double scenario here on EU, because yes, we can anticipate DXY to continue going higher and want to see bullish prices, but we're going to play what we see, not what we think. right? So for now, this is still a demand zone and is still valid. So we're still going to wait to see how the market respects it. Same thing for GU. For now, even though we possibly can assume that the market is going to continue going lower because DXY is getting stronger, that is cool. Once we invalidate these areas and we're seeing the market continue to push lower, we're going to continue taking sells, right? But we're still going to be cautious in respecting these areas, because one thing you'll notice is even if the market does not completely turn around from this area, you're seeing that we're still getting reactions. These reactions are still trade opportunities for you, right? The market reacting off of this area, even if you caught it, you catching a simple accumulation here, a simple accumulation within this area, you can take this higher, targeting this area for like a 1 to 3, 1 to 4, maybe a 1 to 5, right? Depending on your stop loss. So these reactions can still pay you money, especially if the setup is valid. So do not be scared of that, because the market still is going to respect these areas, and we're still going to see at least some type of bounce or some type of reaction to at least give us some pips and give us some RR. Okay, so that's why we want to make sure we always pay attention to the price action first. Read what the market is showing you, not what you think in your head. So always go with the price action and what you're actually seeing. Okay, so what's going on with DXY? One thing I want to, what's going on with GU? Sorry, cuz my mind's all over the place. But what's going on with GU? All right. We're seeing that the market is still pushing lower. We have not invalidated anything like EU has, right? We're still seeing our supply points, right? High, low, high, low, high, low, high, low, right? We're still seeing our mitigations are maintaining. So we are still in a bearish push. We're still in a bearish market cycle towards the downside, as we can see here. What are we seeing? We're seeing the market come back and mitigate areas, right? We're mitigating this zone here to the downside. Now, one thing I want to say, what I'm waiting for is I'm waiting for one of two things. Where we're at right now, I'm waiting for one of two things. Since we have reacted off of this area here, I'm not sure if we got a distribution or not. Pretty ugly distribution. What I would be waiting for is one of two things. Either we're going to continue seeing redistributions to the downside. So let's say we see an accumulation and the market invalidates that, and we're seeing these redistros to the downside. That's one thing, right? Or I want to see the market take out one of these highs, and we can actually expect for us to actually bounce and go off this area. So I'm looking for one or two things. Either we're going to continue respecting these supply points and we're going to see redistributions to the downside, and we're going to see more bearish price action that invalidates this area, and then of course we'll take more sells to target our next zone, which is going to be over here. Or we're going to see that bounce and we're going to see the market actually start invalidating these areas. But honestly, the way it's looking, looks like we might continue lower, just off of the fact that we're not seeing any real buyers coming into the market here. This is not a real accumulation. We're seeing the mitigation still lasting. So most likely than not, we might still continue seeing that bearish price action to the downside. I will have this sitting up here just in case. So that is EU and GU. Next area I'm going to be looking for is here, of course. If we start seeing redistributions to the downside, we will take the redistribution to the downside. So looking at it tomorrow, if we're still here at this price point, I don't know why my drawings are so ugly today, but if we see that accumulation into a redistributions taking us lower, we're going to continue taking those sales until we get into this demand zone, and we're going to pause and see how the market respects that area, right? So as we tapping off of these demand zones and these supply zones, we're just waiting to see what the market is showing us. Are we seeing buyers? Are we seeing sellers? Are we seeing accumulations? Are we seeing distros? Just kind of understanding what's going on, and based off the fact that we are already seeing that bearish push as well. Okay, moving on to UCAD. UCAD has been going higher. We've been seeing bullish price action on this market all week. Now, I know last week, a little bit, I took a loss here on one of these. I believe it wasn't this first mitigation. I believe it was the second mitigation here off of that next play. That push to the upside. We got a little bit of profit, but we didn't break the high, so I couldn't go break even yet. We almost got there, but this is where I took that buying loss, and after that I kind of just let the market do its thing. Since I'm already assuming this market to continue being bullish, especially if DXY is going to continue higher, I'm expecting USD CAD to continue going higher. So after that buy, I kind of just halted because we went into like a little range here, as you can see, and then the market ends up going higher again. So we have the same play again. As you can see, we have manipulation here, market pushes higher, manipulation here, market pushes higher. So getting into this week, what I'm going to be looking for, I'm going to be just watching to see how we respect this next area here. And next area being that drive there. Yep, this next area being this drive right here. And then let's see. Maybe the 50% of that. Just seeing those mitigations, and the market has made a new high as well, so we are bullish, and so we're just going to continue following that bullish market cycle until the market says no. Okay, moving on to AU kind of went into a range last week. We are still pushing lower, so following this bearish price action, like I said, DXY is still gaining strength. As long as DXY is still gaining strength, most likely than not, we're going to see XXX USD go lower. Okay, that's just going to be it. We're going to see that drop. Okay, so that means GU most likely is going to go lower. EU most likely is going to go lower. AU is most likely going to go lower. Now, pay attention still to the price action, because as we see, even though the overall objective and the direction, right, for dollar is to continue strengthening, which means we're going to see those prices fall on EU and GU, AU, NU, right, all these pairs, we're still seeing those pairs respect areas, right? For example, like GU, like we were talking about earlier, even though as far as DXY, the directional bias for GU, seeing that prices are falling on GU, you can see that GU is still respecting its demand zones. So the reason why I say that, just because I'm saying that DXY is going higher and we're most likely to see these pairs fall, that is okay. That is a directional thing. Now, that doesn't mean we just stop paying attention to the price action itself and to our supply zones and to our demand zones, right? Don't let that fool you out. Always keep your mind open and make sure you're looking at both sides of the market. Okay, so that we can take advantage of our buying opportunities and our selling opportunities. Basically, what I'm saying is don't let that confuse you enough to where you're missing your setups and your opportunities. If you see a setup and you know it's a setup, take the setup regardless of what you think DXY is doing. All right, always pay attention to the price action and always pay attention to what the price is actually showing you. Okay, so moving on to gold. Moving on to gold. So one thing I want to tell you guys is gold has reached that next area that I told you guys about, that 2,750. Now, 3,000 is going to be the next target. How long is it going to take before we get there? I don't think we're going to get there, not right now. The reason why I say that is because we're seeing a bearish push right now. I do want to see if gold is going to break this low. Now, if we do break this low, that might set up into our first bearish market cycle that we can see going into gold, seeing a retracement. I would not be surprised if we got a retracement at this area. Honestly, if we start getting this retracement to the downside here, I would expect this to come back into this reaccumulation right here. Now, based on what we're seeing with the momentum is kind of showing us bearish prices, right? How we see that? Look at this bearish push we got here on Wednesday, and look how much the market is failing to complete this push, and we're seeing more tiny distributions. So as the market continue pushing lower, I would look for lower prices, guys. Look for that kind of bearish mitigation, at least until we break this low here, and then possibly we're going to get a bigger retracement back into that institutional price point, maybe to test it one more time before we get that final drop, getting us into our next area here, which would be our reaccumulation. Okay, so something like this is what probably is most likely going to happen if we're going to see the market retrace. Okay, we're going to see that initial break. Everyone's going to be trying to sell off this initial break. Market is going to retrace, collect some liquidity above these highs, and then we're going to see that actual push. Okay. You guys know these markets are never simple. They're always looking for liquidity. Okay, and then we have these indices. We've seen that US 30 has made a new high now. Let's go ahead and put that here. This is going to be our origin, sitting around here. From what we are seeing right now, we're seeing bearish prices. We've seen the market just invalidate this reaccumulation here. So that is telling me that we are in a bearish market cycle. So we have our invalidation of demand. We see that we are reacting inside of a point of interest at the moment. Here is our last push towards the upside before we break the low. So we do have a respectable area that the market is reacting off of. Going down into the lower time frame, what are we seeing? We don't see any like clear distributions or anything like that yet, but we do see that we have a valid mitigation here. So as the market opens up next week, what I would be looking for is I would be looking for more lower prices to target these lows right here. Okay, I'd be looking for the market to show me some more redistros to target these lows right here. Or honestly, if we start going back higher, to be honest, we're probably going to just mitigate this entire move itself. So possibly back into like above 50 to the 80 around this area before we see another push to the downside, if the market's still going to push lower, because that's how the market's looking right now. Moving on to NAS, same thing. We can see we have this major, let me put this here, we have this major distribution that is going on. And then this being that area that I was looking for. To be honest, I still think NAS is going to give me one more push to the upside before we see another push lower. Okay. Or if the market gets past this area right here and we continue pushing, we're going to come and mitigate that push right here. So we're probably coming to the 50% of that if we push past this area before we start seeing another push to the downside. Okay, we are tapping back into that 20,000. Now you guys can see how important these institutional levels are. Look where the market is sitting at the most, right? As soon as we got here, we sat here for a little bit. The market is always tapping and reaching back into this institutional level. This is why we look at institutional levels, and I tell you guys about the institutional levels, right? They're not the end all be all. They're not like, oh, once they reach the institutional level, sell from here. No, it's just in confluence, okay? It's just extra confluence, understanding how price works and understanding how numbers work and how people work, okay? When you're talking to somebody, especially when they're talking about the markets, you're not going to say NAS is at 20,072, right? You're going to say NAS is hovering around 20,000, or NAS is hovering around 25,000. NAS is hovering around 30,000. You're going to use a flat number where it can give somebody a example of where NAS is at. Think about that in an investing standpoint. When investors are targeting prices and targeting these different areas or looking at areas to mitigate, they're thinking about these whole numbers and these big numbers. They're not looking at it as, okay, I'm going to set my TP at 20,792. No. Okay. So just think about it that way. And then last but not least, I'm going to cover Tesla here. I don't know who else covers stocks or anything like that, but I had a request for Tesla, and we're going to talk about it, okay? Stocks is the same way, right? We're gonna look at price action the same way when it comes to stocks, when it comes to crypto, and everything like that. And going to the higher time frame here. So I was looking at Tesla earlier, and all I want to talk about here is from April to here. That's what I want to talk about, right? I don't really care about the price action that's going on past this point, because this is where the market gets more intriguing and we can talk about our, schematics and everything that's going on. So what I want you to notice here, I'm going to start it from a higher time frame into like a lower time frame. So what I want you to notice here is we have this accumulation here. Well, actually I can kind of zoom back over here to the left, right? So what are we seeing to the left? We're seeing distributions, right? We're seeing distributions going lower, and then here's another redistribution. So we have a distribution, redistribution going into an accumulation here. First thing I want you to notice is after this accumulation, what do we have? We have a reaccumulation that gives us a big push that invalidates all of this price action. Okay, so what does that tell us? That tells us like after we have broken this high, so let me put this low right here, right? Because this high goes into this low. Look what happens. Boom. We invalidate this high. Meaning now we have switched over into a bullish market. We are in a buyer's market now. So now we have to start referencing our areas, okay? Well, where's our origin? This is our origin right here. This is our slingshot right here, okay? This is that first accumulation. This is that reaccumulation. That is the push, okay? Look what the market has done. So after we got our accumulation, we got our reaccumulation, we push, we break this high, market retraces, mitigates, and now we see another push. Okay, so now what do we have? We have boom, low, high, low, high, boom. So now what are we saying? Now what am I saying is from this low to this high, if this is the high, the market needs to at least reach this 50% before this becomes our new high. Okay, so for right now, that is a temporary high. Since the market is retracing, we don't know if it's going to reach the 50%. Now, if it comes down and it reaches the 50% and then we make a new high, then this will be our high, this will be our low going into a new high. So for right now, this is our low. I can't say 100% that this is our high yet until we actually get back to the 50%. But what I will say on a price action standpoint, what am I looking for? Like, that's the big question. What am I looking for? What should we be looking for? First, we should be looking for this area to get filled, right? This is the first thing that I would say. Look for this right here. This is where I expect us to come into, at least to fill this imbalance, okay? We've already made a new high. What do we see at the top? Here's our distribution. Boom. That's our distro that starts us into that bearish market cycle. So what would I be expecting next? Next, I would be expecting either the market is going to completely continue falling, or we're going to see a fake out that takes out these highs before we get that next push. Okay, so the most optimal thing to do here is to wait for some type of fake out. Okay, if you're going to sell this, since we're technically still bullish, technically the most optimal buying point would be here. Once we feel this imbalance and we get back into this zone right here, anywhere down here is going to be your most optimal area. So once the market gets down here, you're going to wait for the market to build itself and wait for the buyers to actually come in. Then you look for buys to the upside, right? Once we get into this area, that's the most optimal area to buy. These prices here is the most optimal area to buy at. Okay, now what do you do here? Here, you're kind of in the middle. So this is why we're going to have to be more cautious here, because if you didn't catch the sell, I don't want you trying to, chase after it. If you didn't catch the original sell at the top where the distribution happened, we don't want to try to chase after the market. So now we're going to wait for the market to give us some bearish market cycle, which is going to be a redistribution. Now, since we are already halfway, going down, first thing I would wait for, if you're going to be, cautious and you want to be, the most optimal and taking, the best entries, wait for the market to take out some type of liquidity. It could be the market forming something here and we just, boom, let's say we go above this high here and then we get a big push to the downside. That would be your cue to say, okay, once the market gets back into this area here, I would look for sales to take it lower, targeting this imbalance zone. That is an easy sell. The one thing I don't want you doing is I don't want you seeing this price action and you're immediately trying to sell and the market gets you with a liquidity grab and it takes you out, right? Or the market just, decides, okay, let's just go back higher. Because the market does not technically have to come down here and fill this imbalance. That's what we would love the market to do, and we know that's the most optimal thing that we would want to see, but the market can do whatever it wants. So I want you to be cautious, not, being too aggressive based where we're at here. Yes, be aggressive down here. Once we get down here, by all means, be aggressive. Here, no, do not be aggressive. We're going to wait, okay? Because if you see the market starts building something, let's say the market takes out the lows, and then we immediately push, I would tell you to wait till we get back into here and look for potential buys. But you see how we're waiting for the market to show its move first, all right? When the market opens on Monday and, Tuesday, and we're just sitting here, do not try to predict which way it's going to go, right? Wait for the market to show its move first. Wait for the market to show that initial manipulation and see how we react. All right, you'll know if it's a manipulation, okay? If the market just goes down and we're just sitting down here, most likely it's not a manipulation and we can continue selling. But if you see the market just immediately goes down and then ramps back up and it does not maintain these lows, right? We're not sitting underneath these lows. We're not, showing that bearish push, then most likely it is a manipulation and we're going to see the market rise, okay? So wait for the market to show its hand first. But this is the optimal area, right? This is a buyer's market, but right now we are in a retracement. We are in a pullback, okay? So see if this is going to continue pulling back until we get into here. If it does, great. If it doesn't, and we see that we have a push back to the upside, then we know we're following the right side of the market, okay? So that is pretty much it for this market analysis, guys. Hope you guys enjoyed it. I will see you guys in the next one. Peace out. Let me know if you have any anything that else you want me to cover. It doesn't matter, guys. Stocks, crypto, doesn't matter. All the charts are the same, okay? Price action is the same on all these charts. I read them all the same way. I don't change it. So crypto, stocks, doesn't matter. Just let me know and I will cover it for you guys. I will see you guys in the next one. I'll see you guys in these live calls. Peace out.